Hello, everyone in Australia, Real Life Trading Australia. Hope everyone is doing amazing. Ricky had some questions that you guys sent about the naked put indicator, and I want to show you some tips and tricks. I was going to do it in my best Australian accent, but I can't quite wrangle that up today. It's a little too rusty, so I'll save myself some embarrassment. So the first thing, if you guys are interested in using it, is you just go to TradingView, and up here you search for my name, Matt DeLong, that's me. You go down here to scripts, and then you go down to naked put growth indicator V2. And so what you're able to do is go down here, and there's a blue button to add to your favorites indicator. So add it to your favorites, and that automatically does not put it on your chart. What that does is it puts it here in this list, where you can then click the FX button to go into your indicators, click on favorites on the left, and then right here, it shows up right here, boom, you click on that, and then that adds it to your chart. So a couple questions about the indicator itself. Hopefully I can answer all those queries. So the first thing that I want to explain is this this light blue line, and I'll turn off my 100 and 200 simple moving average just to clarify it a little bit. But this light blue line that goes across here, essentially what that represents is a 10% pullback. And if you're asking a pullback from what, and that is a great question, and the answer is the highest close. So on candles like this, we have an upper wick. It kind of ignores that, right? Upper wick, ignores it, upper wick, ignores it. So the way it works is it calculates what's the close. In this case, if you look up here, the close is 302.76. So if you take 10% away from that, that would give you this light blue line, and that represents a 10% pullback. Now the question is, what is this thick green line? So if you take a 25% pullback down to here, that is this would be a negative 10% pullback. This is a negative 25% pullback. And so what that does is that gives us an idea of how much of a pullback a stock has had. And the thick green line is typically what I use for selling puts for my strike price, right? So if I was to type that out here, I would say green line equals strike price. Now, what's interesting is I've had people who don't even sell puts who use this indicator. So even if you don't sell puts, I'll show you a little bit about how to use that. But that's basically what that represents, 10% from the highest close. And it looks back, the look back period is 200 days. That's a terrible zero, but you guys can imagine what that's supposed to look like. 200 days. That's really what it is, 200 days. So it looks back 200 days. So something like if you get into this area with COVID, the question is, why is the green line above the strike price? That's, again, the same answer. It takes the highest close, which in this case at that point in time would be this candle right here, highest close minus 10%. And then minus 25%. In this case, because of COVID, the actual pullback and the overall market pulled back on, we're looking at the Qs, pulled back a good almost 31%. So obviously 31%, this level right here would have been negative 25%, right at this level. And then down here at the lows right here would have been a 31% pullback. Now, people who don't actually sell put options, people who are use this chart for other things, and I will show you that in just a second. But there are some other cool things on this that you can look at. And one is the green era dollar signs here. Those represent days where we've had a 4.5% pullback. And a 4.5% pullback just means what was yesterday's close to the low. It doesn't necessarily mean it's what the current price is at the moment, but those dollar signs tell us, hey, we've had more than a 4.5% pullback. And on the indexes here, it's actually programmed for 3.5% pullback. So still a pretty significant pullback on an overall index. And then what that does is that tells us to check the option premium. So see what put option premium is at this level. And that's the idea. Now, if you would have sold, let's say on this day right here, we had kind of our lowest low, and you were to sell an in the money put, you would have gotten a substantial premium capture, not only because it's in the money, but also whatever time you sold. If you sold 30 days, 60 days, weeklies, whatever option you picked. I typically like 2 to 3 months. I used to go out 9, 10 months, but a lot can happen. Pretty volatile, choppy times right now here in last week of March. So that's kind of some of the basics of the put indicator. And I want to show you a few other tips and techniques. So for those of you who are interested in buying the dip, people also use this indicator for buying the dip. So let's take a look at something like Tesla, and you'll see here again was our COVID timeframe. And if you would have waited for interaction with the 10 and or 25% level on Tesla to buy the dip, that would have been a decent place. Look how many times we interact with that 10 all through here, the 10 and 25% levels. And so what a lot of people do is they get a little bit overly confident and they make some money buying a 2% dip. Don't buy a 2% dip unless it's part of your strategy. The ideal would be a 10% pullback. So in this case, gang, this candle right here would have been our highest high at that moment. I'm sorry, highest close. So here to here would have been a 10%. From here down to here would have been a 25% pullback. And so buying in these 10 to 25% pullbacks, buying 25% pullbacks is a decent strategy to use. And you can do that a bunch of different ways with options, there's all kinds of ways to stack this. You can pyramid in with shares, you can buy leaps. There's all kinds of things you can do to actually take a position. But buying a 10 to 25% pullback and you're waiting for those to occur, you guys can see how many times in Tesla we've interacted with these levels. Now, obviously, if you bought right here at the low of this candle and it went lower, you may have been a little bit overly panicked. But again, if you just stick to your plan, look how many times we interact with the 10% pullback. Now, the other cool part of this is you'll see that we have this sideways action, which what does that tell us? That tells us that we have not yet made a new high. We have not made a new high. At this point, this was our highest close, and we did not make a new one until we get over here. We made a new high. And so if you think about, regardless of what the stock price does, if you just think of the green shaded area like a buy zone, like, hey, we're going to buy when we get into this zone, and maybe we want to buy in different stages, different levels, right? We want to pyramid in, maybe. That's certainly a reasonable strategy. And you'll see how many times in Tesla we've interacted with that level. So again, gang, don't get super crazy and buy at all-time highs. Don't be someone who buys, at like the highest close would have been right here. Don't go all in on that. On these big candle days, Jeremy says about half of this will pull back. And that's usually a reasonable level. So half will pull back, half, right? And half of that candle would have been something like that. And so the idea is you can buy dips, but don't buy 1 to 2% dips. Buy 10 to 25% dips, 10 to 25% pullbacks. Do that and you'll be in a much better position. Again, at the end of the day, it's just executing your plan. If you are, again, look at this, interact. And if you are like a long time buy and hold type investor, nothing wrong with that. Certainly you want to get some good deals when we interact with this level, 10 to 25%. And look where we are right now, hanging out right here at this 25% pullback level. And again, if you look at Tesla, this was the highest close at that point. We did have one higher close, which would be right here just a little bit. And you'll see I zoom in a little bit, my blue line went up just a smidge, but since that day, and that is January 26th, we have not made a new high and that's basically about 2 months. So we're going sideways. Now I like to, you'll see my levels here where I set up on pyramids, maybe a little bit overly optimistic on buying at different levels, but I am in partial, got 10% shares and some leaps on Tesla. I'm actually hoping for a little bit more of a pullback. We're not, we haven't seen that happen yet, but it's definitely something worthwhile. If you take note of even something like what I call the volume pinch. So on this day right here, the low, if we close below the low, you can get an idea that we're going lower. So that's my, my level that I actually started buying as well. So I'm sorry, my level that I was watching to buy, and then I ended up buying a little lower. So all that to say, gang, that's the naked put indicator. It has multiple purposes, not just for put options. It can also be used to look for buy zones in the 10 to 25% pullback level. And you can use that to time your entries. Even if you totally ignore the candlesticks themselves and just look at the shaded areas and set up some limit orders, you can certainly do that. But that is, that's what I have for you guys on the naked put indicator. And we discussed the Qs and Tesla, and I hope you got something out of that. Enjoy. Thank you guys.